Good evening, all. Ira Epstein with your SPDR ETF stock market wrap up, and this wrap up is for Tuesday, and we're at the 6th of January 2026. Boy, unbelievable. You know, some of these markets have moved so much that I would imagine if you're heavily involved, you made your year already if you're in some of them. But that brings up another thing that is likely, and that is that we're going to see some profit taking hit this market. When, where, that's not what my job is. My job is to tell you that you're approaching or at Bollinger Bands, and many of the markets that are there are not embedded. And if you don't know what that means, learn in my courses, because it's a sign that the markets have, I don't want to use the word panic buying, but I think people are feeling they have just missed the boat and they're jumping in at any price. And they don't realize some of the risk that they're taking if a correction hits the market. And I'm not talking a bear market. I'm just saying a correction. And I'm not necessarily talking 10%. It could be, 5%, 6%. It's going to come. Nothing grows to the sky, and this has been one heck of a rally. This is the strong 2-week period that I told you that Citadel often talks about, where you go up. We already got success out of the Santa Claus rally in the Dow, and now the other indices are joining in and trying to get that seasonal. And then the more research, theirs goes until February 15th. So you're in that period, but that doesn't mean you won't get corrections along the way. Give you an example. Tesla today down $18. All right. So when they come and they're painful as they hit you. Apple down today nearly $5 on the day. But most of the markets are in the green. Even Restoration Hardware has come alive, and we finally are getting a bounce in Home Depot. They're not in bull market strategies, but they've been beaten up so bad that they're getting, in my opinion, a bounce. We get a lot more data tomorrow than we've been getting. We get the U.S. Mortgage Bankers Association numbers at 6 in the morning. ADP, this is the week where we get everything. The ADP number for private sector net jobs data will come out at 7:15. The JOLTS number, the job opening and labor turnover survey for November, that'll come out at 9. Factory order data for October comes out at 9, and the ISM will give you their U.S. December service sector index at 9 o'clock. And remember, this is the week where we'll get the jobs report, and that's going to be important, very important, as all eyes will go on that to see is the Fed right or some of the members right that the market's got to see a lot of rate cuts because labor is going to get hurt. I don't know. I saw today Steve Moran came out and said that he looks for next year to be over a full percentage point of cuts. That'd be 25 basis points, 250s, whatever it is. But that's what he keeps saying he believes is going to happen. Now, before we get into the charts, we got a lot to go over tonight. I want to remind you we have our best sale of the year. And that's 40% off any of my courses, my products. They're right through here. You can buy 1 year's worth. You can buy 3 months at a time. You get the courses for 40 off. You can give them as a gift away to someone. You can use it yourself, whatever you want. And those courses start when you tell us to start them. And they do include the charting software you see here, access to some of my research. You'll find it to be a pretty interesting package. And as I said, this is the best price of the year. www.iraepstein.com. Remove your cursor up to the top here. You'll see an icon. You can click that, or you can click up here, which will be from the YouTube icon, and that will carry you right where you have to be. So as you know, I like the emerging markets. There's some gaps in this chart that are a little bothersome, and we'll have to see if they get filled. The market does have a tendency to come back and fill gaps. As you can see, most charts do. You filled this gap when you gapped down and came back up. So there is a gap back here. I'm very aware of it. And I'm thinking the $55 area is an interesting entry zone if you get that correction from where it's at, which is right now at 57.28. That's not all that far away. Would you agree? I hope you do. In the swing line, you have higher lows and higher highs. Now you're going to see I'm doing a few things that you're going to like with this through here. Now it's just putting for you in the chart here, the moving averages. So you can see where the 200-day, the 100, and the 18-day is. Next, we come up to the Bollinger Band. and you've got 3 days in a row over it. You rarely stay a long time over the Bollinger Band. So the markets are on fire. This is the reason I'm saying you've got to keep your eyes out for what's going on. Have we got an embedded reading yet? So if we step back over here, you need both numbers if you understand the slow stochastics. Let me get rid of that one. They have to be over 80, and you have to do this at least 3 times in a row. So day 1, 2, 3, you're there. So that means a buy signal has been generated. I won't tell you how to enter that from here. I will tell you, I tell my clients never to buy over a Bollinger Band. But now, as long as it stays embedded, I look on breaks for interest. I'm changing some of the colors that you can see right here for you. And when the market's up, it's dark green. You can see what that is. If it's a loss, you'll see that it's in the loss factor. And these are the different parts that we have now on the different moving averages and so on. Remember, I label everything with colors. So on this, you've got the 100-day average, the 18-day for you. If the 200's on the chart, that would be in gray. But I give you a limited amount on this as we do it. Lulu came alive. Look at that chart. Up and away you go. Can the chart go further? I want to go back one because the gap made an important low. You got down here, hit the Bollinger Band, go back to the videos that I had. I said, I think the pros are covering their shorts. And kaboom, all the way back up. So good news for this chart. We're establishing a trading range. Now we'll see what it can do from there. Lululemon is still very much in an uptrend. I wouldn't want to see today's lows violated because do we have an outside day? 216.45 was yesterday's high. You don't. So today's low, if you make a higher high first, will be important, but on its own, it's not an outside day. FedEx, the first time it's closing back over the upper Bollinger Band. Now keep in the back of your mind, it does this on a regular basis, and it generally steps backward after doing it. It's one of the reasons that I am concerned that people are just buying right now, saying the market's going to keep running forever. I am certainly not saying go short, but I am saying if you've been in this and you've caught part of the move, it's time to ring the register on some of it and deploy your money maybe to other areas. The chart that looks still terrible is Netflix. Netflix is still going down. The market clearly doesn't like that they're probably going to get the Paramount. They're probably going to win over Paramount and get the Warner Brothers company. I don't know. I've told you I don't like it, and we'll see what happens. But if you get down cheap enough, eventually it's something worth having. When we come over to Uber, Uber bottomed back here. It's now coming up strong. When it lost its bearish embedded reading, and I can show you this pretty simple. This is what I teach in the course. Here, you lose the embedded reading. You've got a 1783. Haven't lost it yet. Watch. Now, you're up at the 19. You got to be higher than that. And here you lose it. Where's the market likely going? Before it makes a return to this low, it's likely going to challenge the red line. So this date was the 29th of December. Let's jump on the chart. And here you go. And this is what I was looking for. The market to hit the 18-day average. It then backed off. And now it's up to the Bollinger Band. But it was the 18-day average that was the high probability. We look at Rivian not joining the uptrend today. So what's that all about? The chart is starting to show signs that it wants to drop more. You do have an outside day down. It will negate my feeling on that. If you take out 2010, today's high, you can see that right up here. And barring that, I wouldn't be surprised that you start breaking down a little bit. Do I like Rivian? Absolutely. But I'd rather trade it off the weekly chart than the daily right now. In Joby, this is the highest we've been in quite a while. I pointed out to you yesterday that the high here was 1710. You're now at 1659. The market is now challenging and staying over the upper Bollinger Band. It generally doesn't stay under it or over it very long. Look at all these numbers and you can see what I'm saying. So more and more charts, even XLF, are up to these bands, and that's getting me to tell you that I am concerned that a profit taking event is likely to take place. And that's what I'm seeing across the markets. It's not unusual. You come out of the gates very strong at the beginning of the year. This is one of those years. Can we add another 5% here? Certainly you can, across the board. But does that mean it's a high probability to happen when you're over the Bollinger Band? No, it is not. That's a game of probabilities. In XLI, new highs for the whole move. So here you go with the industrial sector coming alive. You know, it helped today that you saw a couple of the Fed speakers come out, and they were certainly on the dovish side. And I cover that in my newsletter. So if you subscribe to my newsletter, you will see that I wrote that. I did that this morning. In XLE, the energy sector, I'm on the record telling you I'm still in the bear camp on energies, period. I realize we've had a heck of a rally, but I also realize that it's all based on what's occurred in Venezuela. I do believe that in the end of the day, the president's going to use this to try to take down Cuba. Colombia might be another play. And in the end, he wants the oil, whatever he can get out of Venezuela, for American refineries. That doesn't mean that American companies won't pay the Venezuelans. It doesn't mean that it's business that we weren't in before there. It's just his way of doing this thing. And that's where I think you're at. In GLD, you have a market that I've been saying I think is going to try to fill the gap that it left right here at 414.75. So now, with me saying that, you're all of what, $1 away from it or so. Interesting. The trend is up. The bias is up. The market could go to the upper Bollinger Band. That number is 417.48. See that right through here. Okay, we'll see what it can do. Google, I've decided to put this back on because I like the sideways action that I'm seeing on the chart. So this sideways action to me, I'd like it to chop around a bit more. And from there, I think we can get a market that wants to lift again. One more time. This is a market that was thought dead when AI became the big event. Why do people need the search engine? Blah, blah. They've proven that you do use Google. They're the monster leader. I like the leaders in a field. And they've been smart enough to partner up with Copilot and other things. It's fascinating. Microsoft, it's beyond me why Microsoft keeps getting beaten up. Today you're getting a bounce, but beyond me. I mean, all their businesses can benefit with artificial intelligence. Who doesn't use Office 365 or the programs in it? I mean, it's fascinating. When I look at BND, so is this where we start to get the reversal? You already have the trend up on the swing line. The market's over the 18-day average. So here's the setup. First time we've had this in a long time, by the way. So if the market's going to be good, all it need to do is take out 74.21, not come back under here. Do I think there's a big upside right now? I don't. Why? Because you've got the combination of resistance at the 100-day and the Bollinger Band. So maybe what the market's doing is it's getting ready for the ADP, the Challenger Gray reports, the U.S. jobs report, and getting itself neutral in front of that. In the dollar, we've had a rally that I think the professionals are selling. If you lose the embedded reading by this getting over 21, then I think they come out because you're probably then going back to wherever the 18-day average is. But until that occurs, I think they're selling right here. In FXE, oversold market, this is where the short covering, I think, is taking place right against the Bollinger Band at this point in time. So please remember, you've got your sale. It ends January 9th. It's right in front of you. Tomorrow's the 7th. So please decide to take advantage. We went to work today. We're starting to buy the equipment for my office and figuring out how it's going to work so I can be back on the set with you. It takes a little more work as a different configuration as to my office here. But we're working on it, and I hope that I'm live with you again this particular month of January. Have a great evening. See you tomorrow in the other videos tonight. Take care.